What's the point of a mortgage point, and what the heck is a discount point anyways? So today, Tom, can you first just help us define what that terminology means? What is a mortgage point?
A point is 1%, so 1.1% of the loan amount added as a cost.
Okay, so it doesn't matter how expensive the house is. If it's a $300,000 house, it's $3,000.
Correct.
If it's a $600,000 house, it's $6,000.
That's right.
Okay. All right, good. So how do these things work? What's the benefit of them to somebody who's financing a house?
Yeah. So John, I guess I'd say at a start point, we normally go with rates at no points just to help keep the costs down for the borrowers, right? But if they need to buy the rate down to make their debt ratio work, sometimes they'll do it for that purpose. Other times you'll find that maybe just depending on how the bond market is that day, that 1 point in cost, that 1%, might get them a little better buy down in the rate than what normally occurs. And so it's a day by day thing, but most people ultimately decide to not do points because they don't want the additional cost, especially on a purchase.
Give me an example of why someone would want to do it. So let's say maybe they're an investor.
Right.
And they plan on keeping the property a long time. Is there a certain point where it makes sense? No pun intended.
Yeah.
Is there a certain time that it makes sense to do that?
Well, I would say the purpose of the point on an investment property is where you find the most value of them in current market times. Because on an investment property, depending on their loan to value and how much they're putting down, they're going to have somewhere between 2 and 3 points of adjustment or cost because of it's an investment property. And so what a lot of people would do is, hey, I'd like to get that primary resident rate. How do I do it? You pay the points that are the adjustment for it being an investment property. So it might be 2 points, it might be 2 3/4 points, whatever that is, but that is the percent of the loan amount that is added as a cost.
Okay, and you can figure out, so if somebody's going to be paying that fee to reduce their payment, you can figure out how many months it's going to take for it to pay for itself.
Absolutely. Yeah, so what we normally do is recapture period. Here's the principal and interest. If you're not paying points, here's the principal and interest with you paying points. Divide that into the cost of the points. Pretty simple calculation to tell you what your break even is.
Okay, Tom, I know I've heard you talking about this for also. So if somebody is facing mortgage insurance and they want to quote unquote buy out of it, that's a little bit different, but that's another time where somebody might want to pay an extra fee up front in order to lower their overall costs, right?
Absolutely. The nice thing about the PMI piece, though, is depending on how much they're putting down, they actually can finance that into their loan amount to not impact their cash. Whereas points on a purchase, you really can't do that. That's going to have to be cash added to your closing costs.
Okay, so when interest rates are high, compared to times like this when they're really low, does it make more sense to buy the points?
So I would tell you credit score drives a lot of that answer. So
okay.
if you happen to be in the say mid 600s, high 600s, you would find that borrower actually might benefit more by paying a point than the person at 780 credit score, because they might be getting substantially better rate just because of their credit score.
Okay. And can you buy points after closing?
No.
Okay. So once it's done,
drives the rate.
That's it.
Correct. Because when you close, you've got a rate locked in. Once the rate's locked in, the points then can't impact that any longer.
Tom, next thing I'd like to know about these mortgage points is how much reduction does it give us in our interest rate? And is that negotiable?
So wouldn't that be good if it was easy? But 1%, 1 point, normally on a 30-year fixed loan is 0.25% in rate. So if you use that as your barometer, if you say, hey, today, Tom, 1 point, what's it get me? And if it gets you a 0.5 point in rate or 0.75 point in rate, I would tell you big value for your dollar spent. If it's only 1/8 point in rate, I would tell you very little value for your dollar spent, because it's not as good as what the norm is. So 1%, 0.25% in rate.
Okay. Hey, Tom, thanks for answering our question. What the heck is a mortgage point and how does it work? And guys, we want you to watch our next mortgage video right here.